Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 1 of November 2024. Indian telecom operators like Reliance Jio, Bharti Airtel and Vodafone Idea have secured network equipment from vendors like Nokia and Ericsson at significantly lower prices. This is due to India's large market and lower average revenue per user. Despite a sequential decline in revenue, India remains a crucial market for these vendors. Ujjivan Small Finance Bank aims to secure a universal banking license by March 2025. The bank is focusing on building a diverse business mix and strengthening its secured loan portfolio. Efforts include expanding product lines and improving digital and IT infrastructure to address RBI requirements. The government has infused around Rs 1,650 crore in state-owned Rashtriya Ispat Nigam Limited or RINL, gripped with operational and financial issues. The government is also taking various measures to keep RINL as a going concern. In this regard, the Government of India has infused Rs 500 crore towards equity on September 19, 2024 and a working capital loan of Rs 1,140 crore on September 27, 2024. RINL, under the Ministry of Steel, is a steel manufacturing company. It owns a 7.5 million ton plant at Visakhapatnam in Andhra Pradesh. India's two biggest private port operators, JSW Infra and Adani Ports and Special Economic Zone, are eyeing major expansion plans worth Rs 80,000 crore, betting on the country's trade growth in the coming years and its maritime vision of attaining a cargo handling capacity of 10,000 million tons per annum by 2047. The downturn in the European automotive sector has cast a shadow over the auto engineering business for leading Indian software service providers and engineering research and development firms in the first half of financial year 25. Key IT services players like Tata Consultancy Services, Infosys, and HCL Tech posted a weaker demand from their automotive clients, driven largely by the European market's challenges with supply chains, shifts in regulatory needs, poor macroeconomic conditions, and rising cost pressures weighing heavily on the sector. At a time when the government is considering Vodafone Idea's request for a waiver of spectrum bank guarantees, Bharti Airtel has asked the Department of Telecommunications or DOT to treat all players equally irrespective of their financial health. In a letter to the DOT, Airtel said it supports the proposed waiver, but any regulatory reform must have a non-discriminatory framework across all telecom companies without considerations such as the financial health of particular operators. Vodafone Idea has cited its financial challenges while seeking help from the government in terms of waiving the need for bank guarantees to protect spectrum payments, a move which it expects will allow banks more headroom to extend credit to the struggling telecom company. Many companies are using the PAN number of a customer and use the income tax department's backend systems to access the customer's full name, address, phone number, and many such details. To combat this, the Union Home Ministry through the Indian Cybercrime Coordination Center has asked to shut down any unauthorized use of PAN of Indian citizens by fintechs and other consumer technology companies. Bharat Forge has emerged as the lowest bidder in an estimated Rs 7,000 crore deal for advanced towed artillery gun systems developed by DRDO for the Indian Army. The order is likely to be split in the ratio of 60 and 40 between Bharat Forge and Tata Advanced Systems Limited, the two developmental partners for the indigenous guns. The National Company Law Appellate Tribunal has reserved its order on Jai Prakash Associates Limited appeal against the National Company Law Tribunal's order to admit the company into insolvency. Jai Prakash Associates Limited argues its debt was restructured, making the default date cited by ICICI Bank invalid. The IBBI has collaborated with the Indian Banks Association or IBA to facilitate the auction of assets under the liquidation process through the ICAI platform, which is presently owned and managed by PSB Alliance Private Limited. ICAI has been conducting auctions for assets mortgaged to public sector banks under the SARFAESI Act for the past 5 years. Accordingly, PSB Alliance has developed a module within the ICAI platform to facilitate the listing and auction of assets under IBC. This centralized platform offers detailed information on corporate debtor assets, including photographs, videos, and geographical coordinates. By enhancing transparency and efficiency through advanced technology, ICAI aims to increase bidder participation, streamline operations, and maximize returns for creditors while improving outcomes for bidders. The Finance Ministry on Tuesday asked public sector banks to mobilize low-cost current and savings account deposits to accelerate the pace of sustainable credit growth and to align their digital and cybersecurity frameworks with industry best practices to ensure customer protection and operational continuity. The Financial Services Secretary also advised public sector banks to give more thrust on technological advancements, robust financial health, and timely and quality redressal of public grievances through responsible banking practices, and to continue to make concerted efforts for enhancing customers' banking experiences. The Reserve Bank of India has been managing surplus liquidity in the banking system. The goal is to align the weighted average call rate with the repo rate of 6.5%. However, rates in the tri-party repo segment have been below the repo rate for 4 months. The tri-party repo rate was 6.34% in October and 6.42% in September. The tri-party repo segment permits participation by a broader set of market participants such as mutual funds and insurance companies in addition to banks. While the RBI regulates banks, others like insurers do not fall under the RBI jurisdiction. The Reserve Bank of India has been managing surplus liquidity in the banking system. The goal is to align the weighted average call rate with the repo rate of 6.5%. However, rates in the tri-party repo segment have been below the repo rate for 4 months. The tri-party repo rate was 6.34% in October and 6.42% in September. The tri-party repo segment permits participation by a broader set of market participants such as mutual funds and insurance companies in addition to banks. While the RBI regulates banks, others like insurers do not fall under the RBI jurisdiction. The Reserve Bank of India had issued a new framework on domestic money transfer in July 2024 for regulated enterprises, requiring stronger Know Your Customer record standards and focusing on banking services and payment systems. The new guidelines are effective from November 1, 2024 as per the RBI's July 24, 2024 circular. The revised regulations are intended to improve the security of domestic money transfers and ensure compliance with current financial laws. These efforts aim to provide a strong and secure framework for money transfers within India as cashless and digital transactions continue to advance. The Reserve Bank of India had issued a new framework on domestic money transfer in July 2024 for regulated enterprises, requiring stronger know your customer record standards and focusing on banking services and payment systems. The new guidelines are effective from November 1st, 2024 as per the RBI's July 24, 2024 circular. The revised regulations are intended to improve the security of domestic money transfers and ensure compliance with current financial laws. These efforts aim to provide a strong and secure framework for money transfers within India as cashless and digital transactions continue to advance. SEBI has released a consultation paper specifying timelines for deploying funds collected by asset management companies or AMCs in the new fund offer as per asset allocation of the scheme. The objective is to seek comments or suggestions from the public on proposals related to specifying timelines for the deployment of funds collected by mutual funds in new fund offers as per asset allocation of a scheme. AMCs may be mandated to deploy funds garnered in new fund offers within 30 business days from the date of allotment of units. Trump's America First policy could reignite a trade war between Washington and Beijing. Some experts, however, see a window of opportunity for India to ramp up its supplies to the US. This is because Trump has vowed to punish China with much higher tariffs than other nations to restore bilateral trade balance. Also, given its more domestically oriented economy, India would be less vulnerable to higher tariffs than China. Experts estimate Trump's tariff proposals would subtract 2% from China's GDP and greater pain on the more open economies in the rest of the world. The Indian government is considering granting infrastructure status to the entire shipping sector. This move would provide the industry with access to financial assistance and concessions, boosting the indigenous shipping industry. The Finance Ministry is currently consulting with banks and financial institutions before a final decision is made. The Goods and Services Tax Network has introduced a new form, GST DRC 03A, now available on the GST portal. This form enables taxpayers to adjust the tax demand amounts they have already paid against a specific GST demand order. It is particularly beneficial for those who have made partial or full payments via the DRC 03 form and wish to align these payments with an existing GST demand order. For instance, if you have a pending GST demand order of Rs 200 and you have already made a payment of Rs 50 using the DRC 03 form, you can file DRC 03A to adjust that Rs 50 against the demand order. This way, your net tax liability will decrease to Rs 150. SEBI has permitted Indian mutual fund schemes to invest in overseas mutual funds or unit trusts that have exposure to Indian securities. The condition is that the total exposure to Indian securities by these overseas mutual funds or unit trusts must not be more than 25% of their assets. The Indian mutual fund schemes must ensure that all investors' contributions to an overseas mutual fund or unit trust are combined into single investment vehicle without any side vehicles. The circular shall be effective immediately. SEBI observed that some apps or web applications or platforms offer virtual trading services, paper trading, or fantasy games to the public based on stock price data of listed companies. Such activities are in violation of the SCRA 1956 and SEBI Act 1992, which are laws designed to protect investors. Accordingly, SEBI has cautioned investors against undertaking trading activities via virtual trading or gaming platforms and asked them to deal only through registered intermediaries. Elon Musk Starlink and Amazon Kuiper may find it easier to operate in India. The return of Donald Trump as US President could benefit them. Indian telecom companies want the government to auction satellite airwaves. Starlink and Amazon prefer administrative allocation. The Indian government seems to agree with the satellite providers. The Federal Reserve has reduced interest rates by quarter percentage point, citing a cooling job market and progress in controlling inflation. Despite the positive economic indicators, the central bank acknowledges potential uncertainties tied to the recent presidential election. Bangladesh Power Board has issued a new letter of credit worth $173 million to Adani Power for continued electricity supply. This follows Adani's decision to reduce power supply by half due to unpaid dues exceeding $843 million. This marks the third letter of credit provided by the Bangladesh Power Development Board to Adani Power to resolve the payment dispute. The National Financial Reporting Authority, or NFRA, is gearing up for a pivotal board meeting on November 11th and 12th, where it is expected to deliberate on revisions to all 35 standards on auditing, including SA 600, and examine 16 consequential changes to the audit standards recently proposed by the ICAI. This follows NFRA's move to issue draft norms for SA 600, a standard that has sparked ongoing tension with ICAI. Another contentious issue in the upcoming meeting is ICAI's recent issuance of standards on quality management, or SQMs, on October 14th. NFRA has disputed ICAI's authority to issue these standards independently, asserting that SQMs are linked to audit standards and should require government notification based on NFRA's recommendations. In response, ICAI has maintained that SQMs fall outside NFRA's purview as they are not auditing standards per se. The GSTN has issued an advisory to inform that from 1st April 2025, taxpayers with an aggregate annual turnover of 10 crores and above would not be allowed to report e-invoices older than 30 days from the date of reporting on IRP portals. This restriction would apply to all document types, including invoices, credit notes, and debit notes, for which an IRN is to be generated. It is further clarified that there would be no such reporting restriction on taxpayers with an annual aggregate turnover of less than 10 crores as of now, and in order to provide sufficient time for taxpayers to comply with this requirement, the above limit would come into effect from 1st of April 2025 onwards. The Indian government has advised public sector banks to exercise caution in microfinance lending, particularly through co-lending with shadow banks. While banks reported no significant stress in their retail portfolios, the government emphasized robust underwriting processes for unsecured loans and sensitive loan recovery practices. Apple is planning to establish a new subsidiary in India, Apple Operations India, marking its first direct presence in the country. This subsidiary will focus on research, design, testing, and providing support to third-party manufacturers. This move signifies Apple's commitment to expanding its operational footprint in India beyond assembly and sales. SEBI has released a consultation paper on a review of the regulatory framework on alignment of the interest of designated employees of an asset management company with the interest of unit holders. Currently, AMCs are required to invest 20% of a designated employee's total remuneration, including non-cash compensation, in schemes over which they have oversight. SEBI has now proposed that this requirement may be reduced from 20% and made applicable slab-wise based on CTC of the employees. The RBI has amended Master Direction on KYC, aligning it with the updates to the Prevention of Money Laundering Maintenance of Records Rules 2005. Now, if an existing KYC compliant customer of a regulated entity desires to open another account or avail any other product or service, there shall be no need for a fresh customer due diligence exercise. Further, periodic KYC updates must be uploaded to Central KYC Records Registry with notification of updates to all relevant entities. The once thriving currency derivatives market is on the deathbed, with volume slumping close to 98% in less than 6 months and most traders shifting to offshore exchange after the Reserve Bank of India moved in to curb speculative trading. In January, the RBI said that all rupee-denominated currency contracts should be backed by valid and unhedged underlying exposure. Although traders could take positions of up to $100 million without presenting proof, they were still required to confirm the presence of an exposure. The regulation, which became effective in May, was intended to curb speculative trading. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.